Okay, I wanted to do some price analysis on Tesla. It's been getting a lot of press lately. And it's had an amazing past couple of months, amazing past year. There was a split. I mean, you had basically a parabolic run. So I kind of wanted to do a price analysis on that. Kind of show where a strategy would have told you to enter, where I think it's going in the next couple of weeks. Um, where some support and resistance levels are, if you do have a position and you're looking for some information on it. So I'm going to start with this 3 moving average strategy. It's something that I had learned. I use 3 week, 8 week, and 30 week. So if you look back here, and I'll show you how this works on this entry. So right here in June, what you're kind of waiting for generally, I'm a little bit more aggressive with it, but the general basis is this. Once you get, so this is the short term is the orange, intermediate, and then the long term is this pink or fuchsia color. Uh, so once you get the short term closing above the intermediate term, and it closes above the prior week high, you enter 15% of your allocation towards this asset. If I didn't know what Tesla was, and I'm just looking at this chart in general. 15% once the orange closes above the blue. Now, once you get the blue close above the pink, you allocate another 10%, so a total of 25%. And then whenever you get the orange above the blue above the pink, it's 100% of the allocation you were going to have for that asset and that investment. So here it would have told you to enter. Now these are post split prices. So if this is say $50, it's like 49. So let's just do 49. This was 49. The split was a 5-to-1 split, meaning that for every one share you had, you got 4 for a total of 5 after the split. So I would do 49 times 5. That's $245. Is basically where this would have told you to enter pre split prices, but post split prices this is $49. As far as the return on it, it's not going to change the numbers because this is an adjusted price based on the split. So we can just move forward at that. But say 245 pre split, 51 post split. So that would have told you to go 15% allocation. Now, once you're 15% allocation, the strategy, your exit is a little bit more aggressive because right now there's not really a confirmation of a trend starting. This is like an early indication of a trend starting. So, but I don't want to go over this trading strategy right now. I just want to kind of show you where it would have entered you. We can fast forward. It would have told you to go 100% all in right here, the week of October 14, 2019, at a pre-market price, pre-split price, post-split price of just say $50, right? So that's my entry. Okay, now let's do that. Let's do that here. Let's do base on the close, $51. Let's change that to white. There we go. So where would we be right now? This trend's continuing up. We would be a significant price increase. We would be an ROI of 1,600%. That's a 17x on your money, right? So the way that math works is you take your price where you're at, so 880. 880, say we did 51 divided by 51. That's what we have here, about 1,600%. And then well, you have to account for your money that you put in, and that would be about 17x. You can also do it this way, 880, to determine how many times your money you would get divided by 51. There you go, 17x your money. So that's amazing. Basically over the span of 2 years? No, not 2 years. A year and 3 months. So yeah, a year and 3 months you would have made that. Best traders in the world do about 20 or 30% a year total. That's for all the money that they manage in a fund or someone's account. That's the best traders in the world do. So you outperform them tremendously. But not everyone got in there. So what I want to show is say I got in. Let's just see. So the way that this TD sequential works, and it's the basis for all my trading. It has these nines, and these nines are areas where you could get where support and resistance levels form. I use the nines as support and resistance. There is support and resistance at the ones whenever it's the start of a trend. But I just use the nines because they're nice to see. They're kind of rare in a sense that they occur a lot less than all these other counts. All the the count up to the actual 9. But what I want to show is we had a high here in February of 2020. That was the high, right? There's a big rally. That was the high. COVID happened. Price dropped, and then we went higher. So once we break a prior high on a new rally, any support and resistance levels below that lose their significance. So for this analysis, we're going to say that this 193 is the basis for this rally. Parabolic runs have a high probability of retracing, 80%. It's like 60 to 80%. So if we want to see how that works, so it's just from the high to the low. So February we had a run, new high, kind of a parabolic run. What was this drop? 63%, say almost 64%. Now if we had a tremendous drop here in this price, where would 60% be? It would be here at 350. Where would 80% be? It'd be pretty much where it broke out. That'd be testing prior highs. Do I think that's going to happen? It's a possibility, but how likely it is not likely. There's so much resistance area and support. So there's so much support area on this run-up. You can see that there's a consolidation here. So what I do now is I'm trying to formulate or find areas of support, right? So I'm going to go to the daily. Is there any 9s here? We just hit a 9. That's also an area of exhaustion. We had a 9 here, retest, that's fine. 9 here, consolidation, retest. This is, I'm not going to go over it, but this is a symmetric triangle. I can see it right here. I've looked at this chart so much. Here to here, right there. It's kind of a symmetric triangle. What's your target for this triangle? The height, basically, about right there, where we broke out. Look at that. Man, you can't chart that better. So you had a symmetric triangle here, 9 count on this high, 1 to 4 candle correction, consolidation. We went higher. I mean, sometimes it's just that easy. But you have to know what you're looking at. So I'm looking for support areas. I don't see any on the daily. Not any that formed after this high. So let's look at the 4-hour. We have some. And I kind of prepped for this. So I'm going to start bringing these up on the 4-hour. I don't have to redraw them. Oh, is that what I just drew? I think that's what I just drew. Okay, here they are. So, and this is a 9 as well. I don't use this one because it's a little bit more cluttered and it's kind of hard to show. But there's a 9 here. So we'll put one there too. These are color coded, so I know what time frame they are. There's a color code that, like, this is color coding that I've used for a while. So there's a 9 here. That's going to be a support area if we break above it. So yeah. So what am I looking? Say. So we have something here. Price didn't really go below it. The 9 was a reversal. 9 here, reversal, high. 9 here. Man, this is like almost textbook. 9 reversal, 9 reversal, 9 reversal. We saw a reversal on the 8. That can happen. So yeah, look at this, man. I mean, we didn't get a reversal here, but 9 reversal, no reversal. So it looks like this breakout happened after we had some buying between the 450 and 550 area. Okay. The majority of the people who got in probably got in around this time if they were still strong enough to hold their position. And what's your return if you did? Let's just say we got in here. You're up, man, 65 to 75%, depending on where you got in. So that's 1.6 to 1.7 extra money. That's also great, in a short amount of time. I mean, that was November, December, January, like 2 months, month and a half. So say I didn't get in, though. Say I kind of got in recently. And I'm trying to look for a tight stop, or I just got in this $800 range. I personally would not be taking this trade right now. I think it's way overbought. We can start bringing in some indicators to see. So if I was in this and if I was getting nervous or trying to anticipate some sort of drop and I wanted to keep a tight stop, I would put my first stop at the low of this 9 at 838. So like say 835. On the 4-hour, yeah, so we're on the 9. Maybe, yeah. So 835. That would be the low of this 9. There's a gap here. It could probably fill that gap. So there is significant support right here at 717. But let's start bringing in some indicators. Let's bring in the Bollinger Bands. So we are outside the Bollinger Band, sustaining price. That's usually indication of, oh, yeah, we're outside of the Bollinger Band significantly. Is there any area where we were? Yeah, right here. It was a 3, but that wasn't an exhaustion. This 9 is an exhaustion point. Do we have any 9s where we were outside of the out? Yeah, here we saw consolidation. We went higher. So there's probably a good probability that we get a consolidation. There's a higher probability for a consolidation than it going a little bit higher. I would say the probability for consolidation and a dropper is equal. So say 75%, or let's just do 60% for a consolidation and a dip, 40% that we go higher. Weekly, we are tremendous. I mean, it did it here, and this is actually a reversal candle. It took 2 weeks and then we reversed. But this is COVID, right? We're outside of it. We're on an 8 on the weekly. If the 8 closes above or is higher, reaches a higher price than the 7 and 6, this 8 could very well be a reversal, an indication of a reversal. Let's bring up the CMF. Here we go. I can get rid of this moving average right now. Let's bring in the CMF and see what that is. So this is kind of giving you an indication of buyers or sellers. There was some selling on the daily. You're getting a little bit of divergence, nothing crazy. 4-hour, there's no concern there on CMF. Let's do Lucid SAR maybe to look at some areas where we can get a breakdown. I mean, that's $100 price swing. That's a lot. I mean, this thing is moving. The gaps here are large. Let's look at something that I look at. Let's look at the Guppy. So this is a collection of the exponential moving averages. I believe these are exponentials. Yeah, EMAs. You can kind of see that there's a gap here. And whenever you get this separation of these fast-moving averages to these slower-moving averages, you can kind of see that there's a separation here, consolidates, separation, maybe a drop. So we have a large separation. So this is not going to keep on going, right? We're going to get some consolidation, potentially a drop. That's on the way it looks like on the daily. On the weekly, man, this is tremendous, but it's been moving since 2019, and our 3 MA moving average said you know, that's probably right. That's right when we would have entered. So they're kind of going together. Let's look at on balance volume. That looks great on the weekly. There's no divergence there. That looks great on the daily. That looks great on the 4-hour. Let's look at the RSI. RSI, you can kind of see this area of some sort of resistance, say right here. Yeah, you can kind of see it right here. So resistance, break out a little bit. We kind of consolidate. We don't go much higher than that, right? We're kind of here. So we can maybe go a little bit higher. Let's look at it on the daily. Daily, maybe we adjust this a little bit. There we go. So yeah, we're at a resistance. I mean, we could break out. We could keep on. Maybe we get a whole other week of some aggressive price movement. Let's look at it on the weekly. Yep, there we go. So aggressive price movement. We got a 9. We got an 8 here, which was a 15%. We got another one for another 15%. We went higher for 2 more weeks, but this was a breakout. This, it rejected, consolidated, then we went higher. And you can see it goes higher once we break the 70 area. So we're here. We could get some resistance, maybe some price slowdown, or it erupts for the next week to 3 weeks, and then we get a pullback. So I'm saying, let's look at this one. So this is not common. I mean, this is price action that's going all the way back to 2013, 2010, whenever it was very first IPO'd. So this is, I mean, this is a special case where we're getting a price movement and it's going up aggressively. And this one, I mean, man, this went up aggressively even before. I mean, we even had some significant divergence here and it still didn't pull back for a while. Right? Look at that. Really here. What year is this? 2013. Yeah, there was this was like the Greek banking crisis in 2013. There was a little bit of drops in the market. I don't know exactly when that happened. I don't remember, but I do remember it happening. So that pulled back, but it took a while. Even whenever it had this 9 and we were in this big area. So we could still see that. I mean, what was this price jump? Still went up 100% from here. So, but this is why I wanted to do the analysis, right? So could we go up another 100%? Could it go to 1600? Let's talk about those price predictions at I think it was, her name was Kathleen Wood. There we go. Kathleen Wood. Right there. So she made a pre-split price prediction of, her conservative number was 7,000, her aggressive was 15. So that's pre stock split. So let's do 7,000 divided by 5. Oh, not times 5. Divided by 5. That's 1,400. That was her conservative price target. What would that market cap be? So whenever people put up anywhere, whenever you see a price prediction, it's always nice to see what these shares are, and then what, those shares times the price, what that market cap gives you. So right now Tesla's at 800 billion. Yeah, so it's pretty much equal to price. Since they're almost 1-to-1. So if I go to her conservative price prediction, 1,400, and she said that was a 5-year window. So that was, I think, that was the tail end and the beginning of 2020. So that was like 2014. 2024. That's 3. We're like 3 years ahead. So that would bring us to about a $1.4 trillion market cap, which would put us above Google, but below Amazon, above silver. And let's do her aggressive price. What would that return be? Right. So that return would be 1,600% or 1,600. No, I did 7,000 divided by 5. 1,400. So 1,400 divided by 884. That's 1.58 your money. So about 60% ROI. Still potentially left in this. Let's do her upper price target, which was 15 pre-price split. That's 3,000. So 3,000 divided by, say, 880, that gives you 3.4 extra money. That's 240% ROI, right? Let me do that math for you. 880 divided by 880, 41%, or 3.4 extra money. So that's still a huge return. I mean, if I was in this, say I got in around this 450 to 500 area, I would be cautious, but I'm putting my stops in. You can see a breakout in the RSI. People feel like markets are overheated. After, I'll take a quick look at the S&P and see what the S&P is, because, likely if the S&P keeps on going up, Tesla's probably going to keep on going up. And we're kind of at a breakout area. Maybe we have another 9, we have some consolidation, and then we break out to those higher prices. But if you want to keep a tight stop, you can keep a tight stop here at 835. What's our average true range? So the average true range tells us what the price swing is plus or minus through the day, or what it's been through the day. So that could be plus or minus. So $36. Say 40 to be safe. So 884 minus 40, that'd be 840, right? If I did at 835, that'd be outside of my true range price movement. So that would be an exponential. That would be an out of the character drop for daily movement, either up or down. But that's averages over 14 days. It looks like it's been more aggressive here in the past couple of days. This was 63, this was 60, this was 20. With this drop was only 18. So yeah, you could potentially set a tight stop here if you're worried about a significant drop. I'm telling you right now that this is a 9. This is major support. So, price could realistically drop, 18%, but you could still be in a bullish posture, right? This could come back here, retest this area, and then get momentum, because there was consolidation here. Bring in buyers that want to continue their long positions or add to their long positions, and then it could go higher, breaking this previous high off to that maybe $1,400 area, which would give us $1.4 trillion market cap. Kathleen Wood's moonshot was 3,000. That'd give us about $3 trillion, right? Roughly about $3 trillion market cap over Apple. It'd be the most valuable company in the world, but it's still under gold. Who else is on this list? Yeah, so interesting. So that's the analysis. Am I worried? I'm in a position possibly between 550 and 450. I'm watching the price. If I want to set a sight stop or maybe start to scale out if I get a dip, preserve some profits. But even if I'm in this area here and it goes to this, I'm losing. I'm 60, 70% up, 65, 70% up. I'd go from, I go to 35%, 35 to 40%. That's a significant drop depending on how much money you have in there. So for every 1,000, that would be a loss of basically $3,000. Not $3,000. For every 1,000, it'd be a $300 loss. For 10,000, it would be about a $3,000 drawdown. You'd go from 1.7 extra money to 1.4 extra money, or 1.3 extra money. But everyone has different risk profiles. If they believe that if we do get a pullback, this is major support, we retest it, then we go higher, maybe they take a little bit of money off the table, and then if this doesn't pan out and it does break down from here, they still preserved a good amount uh, you can't always be worried about getting the top. You know, very few people get the top. Basically, the person who got the top was the fool who bought, and the genius who sold to him, right? Who got the top. So, and the bottoms as well. Um, Bottoms are extremely hard to catch. Um, and I'm talking about the top and the bottom for a market that is bottoming out and reversing for a longer run up, and the top for a market that has been overheated that is pulling back. Um, so I wouldn't be too concerned about catching the tops or the bottoms. If you're trading, the purpose is to make money, not to be an expert at catching bottoms and tops. Um, so so yeah, that's the analysis. Consolidation, potential price pullback, 60%, 40% we go higher. Um, I would just watch it. If I got in at this range, like I said, if I wanted to conserve some capital uh, or some of my returns, I'd put a stop on how many shares I want to sell at about 835, knowing that we could gap down to about 800, potentially to 717. That could be an entry. You would wait for that confirmation, though. You would wait for this pullback, and then we would get hot, a 2 closing above a 1. We'd start to see some momentum. We'd see the RSI start to pull back, but then we'd start to see it gaining again. And then on this RSI, whenever RSIs go extremely overbought, they tend to find support uh, on the downside between 40 and 50. This one found it at 50, well, pretty much 50. And the same thing whenever they get oversold, whenever they make the initial climb, they start to find resistance between 50 and 60. This one, 53. Uh, they usually don't just go from oversold to overbought. There's a pause in there, and they usually just don't go from overbought to oversold all the way down. You can look at this one, right? So we're at 92. Where did it find support? I said between 40 and 50. It found it at 45. So here, you would possibly see the same thing. You would see on this 4 hour, it would go in the 80s. It would dip down, possibly here, find support. That'd be another indication. Hey, maybe I'm at support area. The TD tells me, my RSI is kind of hinting to me. I can enter, but if it breaks down, know that if it breaks down this area here, you're going back to this support area. That would be probably the ideal buy. I got out. We get a drop of 40 to 50%, and then ultimate buy, and then price goes higher. But as we saw in this weekly, we could be in for another big rally to higher prices. I said I'd look at the S&P before we closed out, because most likely that's if the S&P is going to go higher, most likely Tesla can still get that momentum, that speculation that we're getting more stimulus into the market. We're on a 9. We're not oversold. We're not in that oversold region. This could be an area of resistance. We break out, we could go another 4 to 6 weeks, potentially 8 weeks to this next 9. You can see I've drawn support areas here. Look, we're breaking out here. We broke out here. We ran up for week and a half, almost 2 weeks. Then we had some consolidation back to this 9. Like I said, these 9s are high probability of coming back to. Did this one get retested? Yeah, it did. And then we consolidated. Green number above prior green number. It came down, consolidation. Green number above prior green number. Go along. This could break out next week. We can see I'm moderately bullish the S&P. We're on a 6 consolidation, 7, 8, 9. That could happen. 3 weekly. Yeah, I'm not scared of the S&P right now. And Tesla, this is S&P keeps on going up. Tesla could still keep on going up. Yeah, I'm in a position. I'm sitting tight. Maybe taking out some at that area. Like I said, set a stop there at 835 if you wanted to be, if you want to take some profits. But that's about it. So, hope that was helpful. I went over a lot. Thanks for watching.